could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In this video I'm going to be going over some quick updates for Bitcoin, talking about some information which was a part of something I posted on my Twitter within the last 2 weeks, but I just want to reiterate that as I segue into some quick updates for the SPX and gold. Let's go ahead and get it started here. First off, on this 12-hour chart for Bitcoin, what we can see is, first off, this ascending channel that Bitcoin has been in, drawn from the low around December of 2022, somewhere around 16.4 thousand, to the first major local top in the sideways action that we saw during the rough second half, first bidding towards the end of first quarter, really lasting all the way, as you can see, towards the end of October, November, December, end of 2023 in general, as we then went back up to 48,000 since last time seeing it, as the most recent bear market began back in 2021. And so far, we can see each of these 3 points right here highlighted by these green circles find a similarity in the way that the MACD retraced towards the downside down here. You can see each of these times, and actually this recent swing towards the downside of the MACD was just a tad bit lower than it was going all the way back to November, roughly November of 2022 rather, when Bitcoin was in the rough approximately $16,000 range, setting what at this point seems to be the definitive absolute low of the most recent bear market, going back to 64 to 69,000. And we can also draw some rough similarity between this one as well. This would have been also, just to draw another line roughly right here, we can represent this range here in red as being this kind of highly, also if we take a look at the RSI down here, this roughly highly oversold zone. The RSI didn't go quite as low as it has in the past, but it still hit this orange range, which is, as you can see, each of these times lined up with pretty good points in buying Bitcoin, since it seems to have set the low, the bear market low, at approximately $16,000 there at the end of 2022. Now, the last thing I want to point out is we can see here in this instance that Bitcoin did trickle a tad bit lower, and this one as well back in August of 2023, leading into September, halfway around September. Bitcoin continued to trickle a little bit lower now. Each of these moves, I mean, if we think about this one right here, going back to March of 2023, this one didn't trickle any lower, and it was very quick, just one touch and then a very almost straight line up in price type of price action. So when it comes to this period of time, taking some measurements here from, let's say, roughly this range down, it's around 10%. Right here in this instance would have been also around 10%. So I mean, let's say, actually to zoom in first, let's say that it's going to be similar to each of these prior occurrences in these yellow bubbles, roughly around 10% more towards the downside would just take us a tad bit lower. Let's just push it down to around 12-13%, which puts it somewhere around 37,000. Now, if we do see this just a tad bit lower towards the downside, Bitcoin moving down over the next few weeks or the next month or so, it would roughly line up with this 382, which again is the inverse of the 618, the typical phi-based number used, or 1.618, but in this case 0.618 to 0.382, acting as two sides of the same coin here. Also another reason I think it could go lower, on top of the fact that this MACD, in most of the instances where we see similarity again with each of these bubbles, are showing the fact that there's definitely a likelihood that this most recent move towards the upside here, which so far from the local low that it was set at has been, well, actually roughly 11.14%. We are also, again, on this 12-hour chart, you can see that prices come into contact with the 50 EMA band, the turquoise moving or estimated moving average. There's plenty of reason, and price does seem to be kind of slowing down right here so far. The stock RSI is completely has topped out. Now it could kind of just stagnate up here going sideways, and price will continue to move higher as the RSI would move higher as well. The RSI is also finding potential, and obviously assuming if we drop down another 10 to 15% more so in price over the next few weeks, the next month, they could find this rejection roughly in this golden pocket, just shy of the 0.618 right here, the turquoise retracement. Now, entertaining this case in terms of the MACD, if it were to fall down over the next number of weeks, you can see that right now the MACD is finding, so far, I mean, it's still just looking straight upwards at this point, but it is at the 0 point, which, you know, it could be something like this right here, which again likens back to the fact that we saw this increase right here in the price, and then we had that 10% drop, like I measured not too long ago. And again, also just perhaps something similar to this where we build up and we kind of sit around. You can see right here each of these times we sit around after making a low along the 0 point, because this is as important as the MACD being a momentum indicator to flip this 0 point. You can see that it lines up with each of these moves towards the upside right here as well that I'm pointing out with the cursor. Once it sat around that 0 point for a little bit below it, again, as you can see each of these times, eventually once it flips it, there is that strong swing of momentum towards the upside. Moving into this daily chart, we can see this other type of MACD here. This one on the prior chart was just a MACD paired with Bollinger Bands. This is the typical, the more traditional type of MACD that will be seen. And again, you can see with this yellow dotted line down here, basically the exact same thing being painted, except this is on the daily chart. And on, to go back to this 12-hour chart, we can see that this bullish cross had already happened, although in the daily, it hasn't happened yet. But you can see as it is getting close, again, we still need to pass that 0 point, which again is going to be the main thing here, whether or not we see, let's say, like for example, something along these happens, we see a brief bullish cross, and then it comes back down and sits sideways for a little bit, which will then likely indicate some sort of sideways action over the next few weeks, or maybe even coming down a little bit lower down to around 37 to 37.5 thousand. Again, just to reiterate my past videos, I mean, definitely, I think 35 to 36,000 is on the table. If 37 to 38,000 is lost, then obviously approximately 30,000. Again, as I've been mentioning for quite some time at this point. To quickly update this, we have the rising wedge right here that I've been talking about in price. If we look here at the wedge, the descending wedge that's been on this RSI that I've been updating, you can see that it briefly lost it as we've seen this pullback outside of this ascending pattern. And again, we can see the price is just a tad bit below the actual what had been support range. So I mean, we could, whether or not we move up or more, we could just be seeing basically price coming close to what was support, and then we come back down and some more, whether or not it stays in this area at 37,000, then goes higher, or it comes down to here, or it comes down to 30,000. All three of those scenarios really are not a big deal as far as I'm personally concerned in the overall bullish scenario of Bitcoin. I think that, again, 20 to 40% is the bull market criteria for a healthy retracement, and 40% takes us down to 29.3 thousand approximately. So if we were to see wicks down to just basically approximately 29,000, I personally wouldn't be worried. If it starts to significantly show volume support and other criteria for being below 29,000, then I would, me personally, start to get a little worried about where the price might be going over the next number of months, over the next year or so. Outside of that, to move into this 3-weekly chart here, the last time that I went over this video, or not this video, rather, this chart was around 2 to 3 months ago, towards the end of last year, sometime in around late September, early November. And really the main thing is these Fibonacci retracements, as you can see, taken with respect to the bear market from 2011 to 2011, from 2013 to 2015, from 2017 to 2018. This corresponds with my phase cycle theory, which I've talked about and elaborated more in depth in many videos, but quickly, do you have phase one from 2011 to 2013, and then from here from 2013 to 2017, that's phase two. This creates one whole cycle. This was cycle two right here into 2017. Once 2017 began, we've been currently in phase one so far this entire time. We've seen, as you can see, there's a 1.5 to 1.618 peak right here. Pi cycle high was printed, and then it continued to go up to this green range from the 2.186 to the 2.382. And the pi cycle indicator and the inputs I used, another indication was given. Fast forward to the beginning of the current phase one of cycle three. We can see that we again saw the exact same thing, a 1.5 to 1.618 peak. So as I've been saying for quite some time, I believe we will hit somewhere around 180,000 to approximately 250,000 within this upcoming bull run, which at this point I currently believe is going to, not only will I think Bitcoin surpass 69,000 within the year 2024, I think that the bull market, which I believe there's very definitive reason to believe we are in and have been in since roughly 16,000, is going to set its absolute top within 2024 rather than 2025, as I have mentioned in past videos. Now, the specific thing that I want to point out for this video is that, again, like I said, somewhere around late September, early November is when I first went over this chart. And zooming in here, that is going to, in terms of this 3-weekly chart, printing a new candle every 3 weeks, lines up with this candle right here, this white high volume trading candle, this vector candle here. The first candle that solidly showed that price was going above the roughly $30,000 to $31,000 value that had been finding sideways resistance at from March of 2023 to July of 2023, and so far from the rough around, let's just say 35,000 that Bitcoin was trading at when I had first went over this chart, it went from 35,000 to approximately 49,000. It has, to zoom back out here quickly, validated this comparison, this 21 bars from bull top to bear bottom, bull top to bear bottom, and then bull top at 69,000 and bear bottom, the highest price to lowest low of a bear market. Each of these times going back to 2013 elapsed over a period of 21 bars, or roughly 410 to 430 days. And on top of that, the 2013 to 2015 bear market really totally, in a sense, elapsed around 34 bars or 686 days. As you can see, it went sideways throughout this bear market low range until things finally ended, that sideways action, and the bull market really began up to approximately 20,000. Now, if we fast forward to 69,000, we can see this being the highest high of the bull market price-wise, not necessarily structurally speaking, as I've mentioned in past videos. Again, we see the same thing, 34 bars, 686 days, and this was after we had this initial upside, which a lot of people, like myself, at this point were saying that the bull run's likely to begin at this point. This also could have been, as I would have gone over in the past, it's possible that price does go lower at the end of the day, back below 16 to 15,000, because it's definitely possible. Most likely things have already begun for a number of reasons I would have gone over. So far, everything has been validated, and on top of that, as we can see here, going all the way back to the first phase of cycle 2, we see these turquoise RSI vector candles printed. The bull market was absolutely confirmed once that happened. Right here, bull market absolutely confirmed. Right here, bull market absolutely confirmed after the March crash, and the price basically returned to the lows of 2019, although not quite as low, but essentially just as low. And now we have seen the first two right here printed, from the 3-weekly candle December 25th to the 3-weekly candle of January 1st, the current year. Now we could, as I mentioned, I believe in the past video or one of the last 2 or 3, it could be something similar. We see 2 turquoise vectors as we do currently. So this drop was, I mentioned on the lower time frame chart, this one right here was 40%. That is the absolute, approximately 40% is the lowest retracement you will see going back in Bitcoin's history during a bull market that the price will trace. Again, just to show that 40% it's going to line up around approximately 29,000. So as long as Bitcoin holds 29, 30, 31,000, to reiterate, I don't personally think there's anything to worry about. And if price were to actually reach that, then I think that that would be the absolute last buying opportunity within the current bull market, and also definitely before Bitcoin pushes back up to around 60 to 69,000. So when it comes to the areas where Bitcoin could move up towards in the next number of months, if we use this daily chart, we can see that there's currently a vector control zone in terms of volume around 45.5. Well, actually, we'll just say 45,000 to 47,000. That's going to be a short-term area, or perhaps a medium-term, a few weeks or so, not necessarily a month or a month and a half, I would say, but that is going to be important. So 45,000, 47,000, short to medium term area to push back through. Once that happens, I'm inclined to believe that at highest, Bitcoin could push 57 to 60,000, and then see some sort of, cool down, some sort of sideways, maybe even upwards tilted, as we've been seeing recently here from, like, for example, from October all the way to where we most recently locally topped out at around January 12th, which would have been a couple days after the Bitcoin ETF approvals, all 11 of them on January 10th. Again, which is going to then, this is going to lead into what I'm going to go over here in a few moments in terms of the Bitcoin ETFs and what that means. Now, as I said, 57 to 60,000, I think, could be a potential, just to draw a zone around this rough area, around 50, let's see, to around 55. This area right here, I think, going to show massive. I mean, if we look at this wick, basically up to 49,000, you can say that anywhere from right here and below, basically, this has already been roughly recovered in that pretty ugly drawing, that is true, has been roughly recovered. So everything below this line right here, and now we still kind of have this area right here that I've encircled in an ellipse to kind of maybe push up to and settle in for a period of time. Now, it's definitely possible, again, with the Bitcoin ETFs, that Bitcoin just completely, let's say that this current local low is the last one, and it just rips towards the upside here over the next number of months leading into the halving. Or it could go a little sideways, a little bit down, a little bit more, and then finally rip towards the upside. But I definitely think there's reason to think that it could stop, again, somewhere above, at lowest around 53 to, I'll say 53,000 to 63,000 could be the next potential range where it could head into and then set for a bit. But that's definitely not necessary. And like I said, it could completely just rip through that, given that we have 11 Bitcoin spot ETFs approved all at once at the beginning of this year. So on top of that, to bring me into this, as I tweeted on my Twitter account, just within the last year or a year and a half, going back to a year and a half at most would have been likely when I have been talking to people in my personal life, such as friends and family, about it. But when it comes to on this channel, within the last 6 months to a year, I know for a fact that I have mentioned this, which again is going to pertain to this video, which I'm going to play.
And we believe it's so important to be anticipating the next move. I would also say on the beginnings of a ETF Bitcoin, we believe ETFs are a technology no different than Bitcoin was a technology for asset storage. We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own share.
Now, to use that to move into my SPX and my gold analysis, as Larry Fink was saying, there is the tokenization of what we understand as traditional concepts of the market, such as certain companies with their stocks, such as Apple, Amazon, Tesla, Microsoft, etc., being companies and businesses which are going to, at some point in the future, ultimately and inevitably, I believe, have to adopt themselves into the blockchain technology and the solutions that it can provide in socio-economical and political realms of human peer-to-peer interactions, which is a staple of Bitcoin in itself as an economic avenue of peer-to-peer interactions, which, again, so as I said, this brings us into the SPX. As I've gone over, which this chart may not actually it does. So as I've gone over in past videos, which I'll link them as cards at the beginning of this video when I actually go this a little bit more in depth, but basically since around 1994, so 1995, 93, just roughly this range right here on the chart. I believe what we can see here is we see this massive M-looking structure, and we basically see the SPX is essentially gone just vertically upwards since 2009, 2008, after this the crash of 2008, housing markets, etc., under the American administration of Barack Obama. Now, what's interesting about this is if you take a rough measurement tool, we can see here that it actually lines up around 670 days, and then from this bottom to this peak is also going to roughly line up around 670 days as well. So there's temporal confluences that I've gone over in the past, which again, like I said, if you want a more elaborate breakdown of why I see what I see, I'll have it linked as a card at the beginning of the video. But so far, I think what we're seeing here is something similar to what Bitcoin saw 2021 to, well, March of 2021 to October 2021, where we set this double top, and the price was seeing, as you can see on the MACD, bearish divergence. RSI was also showing bearish divergence as well. That's basically what I think we are going to see here for the SPX. Now, I wasn't particularly expecting this much of an upwards move here, since it hit roughly around 3,500 back in October of 2022. Nonetheless, I still think, as I've been going over, there's reason to believe that the RSI has kind of been dying down as prices continuing to go upwards. Look here at the MACD, it's finally reached this trend line, which I put on here a number of, maybe around a week to 2 weeks ago at this point. So that's being met. The RSI hasn't been met just yet. I still definitely think there's room for price to move up a little bit more, as I've been saying, maybe upwards towards around 5,300 at highest to see some overextension, where we'll see this RSI build up, and then eventually the RSI trend will reject, and we'll see the overall, the price of the SPX go back below this trend right here and enter into the very severe, like 60 to 70% crash that basically my analysis is pointing to. Now, to quickly factor this into what Larry Fink mentioned about the tokenization, so businesses, etc., can move their what is now in a traditional stock market fiat sense on the stock indices, such as what we're looking at now, the SPX, also the New York Stock Exchange and the NASDAQ. These companies will basically take themselves off of these traditional indices, and they will move themselves into some sort of ledger-based, a digitized or a blockchain version, essentially, and they'll become a token. Like, for example, let's say that Apple decides to go with Ethereum, and they create themselves an ERC20 token, or whatever specific terminology may be used. The generality of it at the end of the day is the fact that these businesses, as Larry Fink said, all this stuff is going to be tokenized at the end of the day. Now, to kind of counteract my specific bias at the current moment of seeing the stock market crash towards the downside, as I've been saying, over the next year or two, maybe longer, whenever it finally sets this double top, which it seems to be doing. Now, there's a complete possibility that some sort of institution or higher up people who have control of American society, governmental-based things, and just just obviously the people at the higher echelon of society, they convert the SPX and these indices themselves into tokens. For example, let's say in the next number of years, once they get this tokenization into place, as Larry Fink was mentioning, there'll be SPX token or NASDAQ token or New York Stock Exchange token, and all the companies that are listed on these certain indices will have every single one of them, or a certain number of them, the ones that live on, or whatever you want to think, how you want to think about them transitioning to the next state of society. And this digitization we've been seeing really since the internet, and then obviously with phones and then more developed computers and whatnot, we'll see even something like the indices move over into this tokenization, which, if that happens, to be contrary to what my personal belief of the crash, that we would likely still see the SPX continue to climb here, because not only, like for example, if the SPX or any of the other indices didn't convert themselves or its indices itself into a tokenized indice, basically, this indice itself is going to die off. But that doesn't necessarily mean that the companies listed under this indice are going to die off. For example, I'm not sure at the current moment which indice, or if on multiple of them Apple exists on, but whatever indice Apple exists on, let's say it is the SPX. Again, I don't know if that is the one that it's on, but let's say the Apple exists on the SPX and Apple itself tokenizes, but the SPX doesn't tokenize. Apple is not going to suffer because it evolved itself, essentially. It's going with the flow of the evolution and the technological advancements of society. And again, just to reiterate, if the SPX doesn't do that itself as an indice, it's going to crash. Like if there's a mass exodus of, I would say at least maybe 50, 60, 70% of what's on the SPX here, then it's going to lose a lot of its value because it's no longer listed under the indice, whether it's this, the SPX, the NASDAQ, or the New York Stock Exchange. So quickly just move into here, gold, basically the same picture is printed. You can see here with the RSI, price hasn't barely done anything. We're still seeing bearish divergence in the kind of medium term right here as I'm highlighting my cursor. Then we have this longer term as I've drawn in here with the red trend. Again, somewhere the SPX, it hasn't met it yet, although the MACD, unlike the SPX, as I've shown, has met this MACD resistance. The gold got close to it, didn't quite meet it. So there's still a possibility we see something like this and it crosses below for a bit, finally comes back up, and maybe the price moves up a little bit higher here. Maybe it just kind of generally goes sideways and then finally loses this and goes towards the downside here. But overall, again, so I still think currently that the SPX, at least gold, I think is going to at least just trade sideways. I don't see any good reason for it to spike up here. Although again, I could be wrong, and it could definitely see a very large bull run over the next year or two, or even for the next, for the rest of this decade up into 2030. Who knows what's going to happen? But ultimately, at the end of the day, I still lean to seeing gold basically be either kangaroo or significant downtrend bearish over the next year or two or longer. And essentially the same thing for the SPX, unless the scenario plays out like I was just going over, and they transition the SPX as an indice itself into some sort of tokenized, digitized version that exists on a blockchain ledger. But outside of that, that was all that I wanted to go over in this video. So all that being said, hopefully you enjoyed. Again, none of this is meant to be financial advice. If anything, it's meant to be educational and for you to take away some form of information, whether it pertains to the technical analysis and patterns and things like that, whether it pertains to the news or other information in terms of society gone over in this video, or it pertains to something I specifically said that pertains to my own ideas. But nonetheless, I hope you all have a blessed day. So, as I just ended off that video there, I quickly realized that I'd seen something earlier today that I wanted to go over that had slipped my mind. But we see this tweet here by @PastorCoin. Gold is better than Bitcoin because it's physical. I can hold it in my hand. Newspapers are better than X, or formerly Twitter, because it's physical. I can hold it in my hand. Walmart is better than Amazon because it's physical. I can walk in and shop. CDs are better than MP3s because it's physical. I can hold it in my hand. Blockbuster is better than Netflix because they let you borrow physical DVDs, which I can hold in my hand. Sending a handwritten letter is better than email because it's physical and can be held in your hand. It's abundantly clear that digitizing physical mediums of communication and commerce has never worked. Why do you think Bitcoin will? Now, clearly he's being sarcastic there. We can see in the numerous examples that he mentioned. Specifically, one that I want to point out is the Blockbuster. And given that's a little bit more recent and, you know, younger people around going back 15, 20 years can kind of wrap their minds more a little bit around that in terms of actually experiencing it, being around roughly when this happened. Myself kind of being in that category post 20. But anyways, he's completely right in saying this is that, again, this goes back to what I had just previously been going over in terms of the video of Larry Fink, the tokenization of traditional assets in many different realms. But overall, this is, again, seems where we are going in terms of further digitizing society. And then also another one that he mentioned, you know, the newspaper, comparing newspapers or even magazines to not just Twitter or X or, you know, online, for like CNBC, MSNBC, Fox, and this other, you know, news outlets, which in the past would have been relative to newspapers. Now we're on the internet, we're on computers. As I mentioned earlier, advancing computers, technology, which factors into phones and the newer iPhones and the smartphones. It's just overall we're in society, we're advancing. I mean, I could take this back to the ancient days, the Bronze Age, the Iron Age, the plenty of periods that have since died as we made technological development, or not developments, but advancements, further propelling society into these new paradigms of not only materialistic understanding in terms of the realm of technology and what we can do in the real world, but also spiritual paradigms, whether or not you choose to be religious or you choose to think that or some akin to original Buddhism, we have some sort of Atman or this higher soul self or spirit soul or spirit self that you must understand so you don't have to go through what would be considered some form of reincarnation, so that you reach liberation and you're no longer entangled to this kind of blind drive towards a physical body once this one that you're currently in perishes. But anyways, I wanted to quickly add this towards the end of this video.
Ooh, I'm regretting